All right, let's jump right in. When it comes down to it, our whole financial life pretty much boils down to one fundamental choice. It's a single decision that really dictates whether we spend our entire lives working for money or if we figure out how to make our money work for us. Today, we're going to unpack that choice by looking at three really powerful and very different philosophies that could completely change how you think about your future.
And it all kicks off with this incredibly stark, brilliant quote from the one and only Warren Buffett. I mean, it sounds simple, right? But what if I told you that this one sentence actually holds the blueprints for a few wildly different ways of understanding our economy, and more importantly, your place in it? We're going to dig into what he really meant, and what some other thinkers believe he was actually revealing. So here's our game plan. We'll start with that great divide that Buffett's quote sets up. Then we'll walk down the investor's path he's famous for, before taking a hard look at a worker's reality. From there, we'll uncover a really powerful third way, which is all about focusing on yourself. We'll even map out how to get from just earning to actually owning. And finally, we'll wrap up by asking the big one, what's your mindset?
Yeah, that quote, it really paints a picture of this massive economic divide. And it's not just about being rich or poor. Not at all. It's much deeper. It's about your fundamental relationship with work, with time, and with wealth itself. Okay, so let's start with the most obvious interpretation, the one from the Oracle of Omaha himself. This is the path of the investor. It's the exact philosophy that took Buffett from just some kid buying his first stock when he was 11 years old to one of the wealthiest people on the entire planet.
So what's a secret sauce? Well, at its core, it's something called value investing. And the concept is actually beautifully simple. Think of it like this. Buffett doesn't go around chasing fads or hot trends. Nope. He shops for quality merchandise, great companies, that just so happen to be on sale. And this whole philosophy, it's built on a foundation of just incredible patience. He's always saying you've got to start early. Plant that tree today so you have shade tomorrow. You have to think in decades, not minutes. And if you do it right, when you buy a piece of a truly great business, you hold on to it forever. It's a long, slow, steady, and disciplined game. So here's the absolute key takeaway from Buffett's world. It's not about being the smartest person in the room. It's about your temperament. The stock market, in his eyes, is basically just a machine that systematically rewards people who can control their emotions, and it punishes those who can't. Patience is the ultimate unfair advantage. So it sounds pretty straightforward, right? Be patient, invest smart, and let your money do the heavy lifting for you. But is it really that simple? Is this a choice that's available to everyone? Or what if Buffett's quote isn't advice at all, but actually a chilling description of a system that most people are already trapped in? So now I want us to look at this from a completely different angle. An analyst named Ben Tippett argues that we should reread that famous quote not as friendly advice, but as a blunt description of a structural divide that's just baked into the way our economy works. Tippett basically says that Buffett's quote is the perfect modern-day summary of the classic Marxist split between capital and labor. You have one group that owns the assets, the businesses, the stocks, the real estate, and then you have another group that owns only one thing, their ability to work, which they have to sell for a wage. And this chart, wow, it just lays that divide out perfectly, doesn't it? On one side, you have capital. They're the ones making money while they sleep because their assets are generating returns. On the other side, you have labor. They're the ones who have to actively work to get an income. From this perspective, it's not about a simple mindset difference, it's a fundamental power relationship. And according to this analysis, the power in that relationship has been shifting a lot. For instance, Tippett points to the huge drop in trade union membership, which historically was the source of labor's collective power. A 49% decline. That suggests the work until you die side of the equation has a lot less leverage than it used to. Okay, so we've got the patient investor, we've got the critical worker. Two really different ways of seeing the world. But what if there's a third way? What if there's a path that isn't about choosing a side, but is about fundamentally changing yourself to build a bridge right across that divide? And this brings us to the philosophy of the personal development legend Jim Rohn. His whole argument is that your external world is just a reflection of your internal one. If you want your financial situation to change, you can't just change your job. You have to change you. Your income, as he famously said, will seldom exceed your personal development. Now, author Bharat Rajora puts a really modern, kind of aggressive spin on this idea. He argues that the traditional path we were all sold,
You know the one. Study hard, get a degree, find a safe job, work till you're 60. Well, that script is broken. In today's world, he says that path doesn't lead to freedom. It leads to dependency. So the key here is a radical shift in your mindset. It means moving from that closed-off thought of, I can't afford it, to the open-ended question, okay, how can I afford it? It's about understanding that being broke can be a temporary phase, but staying broke, that's a mindset. And it's realizing that, yeah, a formal education will make you a living, but it's self-education that's going to make you a fortune. In this third way, it isn't just about, positive thinking. It's about action. It offers a practical strategy for building that bridge from the labor side of the divide right over to the capital side, to finally move from just earning an income to actually owning assets. The very first step is just understanding that there are 4 types of income. See, most people are stuck on level 1, earned income from a job. But the real goal is to build multiple streams, to add business income, then investment income, and ultimately the holy grail, passive income. That is how you truly start to make money while you sleep. And check this out. Here's an actual actionable plan from Rajora to make it happen. You systematically kill your debt, stop the leaks in the boat. Then you actively grow your income. You start investing right away, even just small amounts. You build that safety net. You constantly upgrade your skills, and then you automate the whole system so your wealth grows without you having to constantly push it. So we've been on quite a journey here, haven't we? All stemming from that one single quote. We've met the patient, long-term investor. We've listened to the critical analyst who sees a divided system, and we've explored the path of the self-developer who is totally focused on personal change. Let's just put their core ideas side by side. Buffett believes success comes from patience. Tippett suggests real, systemic change requires collective action. And Rohn and Rajara, they argue that for anything in your life to change, you have to change first. It's 3 different lenses to look at the same reality. The only question is, which lens makes the most sense to you? We're going to end with this powerful thought from Jim Rohn. Your life does not get better by chance, it gets better by change. So whether you see yourself as an investor, a worker, or maybe just a work in progress, the one constant is the power of change. So the final question I have for you is, what change will you make?